Hey, fellow Stockcardians! It's another of those special episode. I have a special guest today who will introduce himself very soon to you. Is one of our latest portfolio publishers on the Stockcard and partners to Stockcard that I'm personally super excited to get to know because it's rare that I get very impressed by someone's portfolio and investment strategy. And the guest today managed to impress me so much that I kind of want to know every stock picks he has, and I want to know why, and I want to be able to follow him. So with that exciting background, I want to say hello to Paul. Paul, welcome to Stockcard.
Well, thank you, and that's far too kind of an introduction.
No, you deserve it because we're basically right jumping in. I was looking at the portfolio that you added to Stockcard. It's a Freedom portfolio, rightfully named or very fittingly named. And it's amazing how you pick stocks and how you keep adding to the same position that you have conviction around. It is truly inspiring the way you invest. So let's just talk about a little bit of who you are, what you do, and how did you get started in the world of investing in the stock market?
Yeah, so my name is Paul Essen. I'm the founder of Paul vs. the Market, and as you said, the Freedom Portfolio is what I've called my portfolio. I don't really have any kind of interesting superhero origin story when it comes to investing. I have been investing for almost 20 years. And I had a family friend who, at the time, was kind of dabbling in stocks, and he said, "You might want to check this out." And so I started investing a little bit. It took me a while to kind of find my legs to figure out what kind of investor I wanted to be. At times, I thought I was a contrarian investor, a value investor. I've made pretty much all the mistakes that anybody can make over the years. And for a while, my returns were very inconsistent, very erratic. And then at one point, I found the Motley Fool and actually worked at the Fool for a couple of years. And I found it reignited my passion for investing, and it really focused me on a new style of investing. And I'm very much an admirer of David Gardner's rule-breaking philosophy and the Motley Fool in general about finding high-quality, innovative, and disruptive companies that have a lot of optionality and sticking with those companies over the long term, even when they look ridiculously overpriced, because investing is all about the future, right? It's not about how it's done in the past; it's where it's going in the future. And a company that's overpriced today could be underpriced a year from now.
Yeah.
And winners keep on winning. And there's, I, in a more general sense, I'm kind of an optimist in humanity, and that innovation continues moving forward, technology continues moving forward, and so there'll continue to be this disruptive creation and innovation, and I like to try and be a part of those companies whenever I can.
Nice. I love that. A few things you said in your sort of introduction that kind of resonated with me. I want to talk about it. One is just believing in the future of innovation and how the humanity is moving forward, which is such an important fact. We tend to get bogged down with the daily fluctuations in the market and this boom and bust cycles that it's difficult to understand that we're investing in the future of humanity as a whole. When you invest in innovation, it's about investing in the future of humanity. And if you believe humans are moving forward, so there are companies that are pushing the humanity forward. So it's so cool to be able to kind of invest in them and kind of go along the journey. That's one. I appreciate you having that strategy. The second one is so your multi-fool background is super cool. I also wrote a few times for multi-fool, sort of as a contributor. I know you have that background. We just added a few other fellow ex multi-fool or fools, I guess, to the stock portfolio. So it's super cool to kind of see this community of long-term investors are coming around Stockcard. Cool. But so tell us a little bit more about how do you invest full time? Is this your full-time job or is this your side hustle? How do you go about balancing your life, your kids, and that I know you have three of them, with the research and deep research that is required to create such an impressive portfolio?
Sure. So it's absolutely not my full-time job. I don't even know if I call it a side hustle. It's more of a hobby that I'm trying to share with the world in terms of Paul versus the market, share with my friends, and honestly, a lot of it comes from a desire to try and spread financial literacy. But let me answer your question first. So yeah, I'm a father to three beautiful daughters. I have my own full-time job. Basically, I like to think that I have multiple full time jobs between being a father and my career and everything else. So it is a challenge to try and find time to research stuff. And anyone who follows me on Paul versus the Market will note that sometimes there will be entire months where I'll kind of go dark because life intervenes, right? And there's just too much stuff going on. But I just try and find. I find Twitter is a very powerful resource in terms of finding a lot of smart people who have a lot of smart ideas about things, and Seeking Alpha, the Motley Fool. There's a lot of great resources. And I think you were alluding to Seven Investing, also a great resource out there. I think there's a lot of noise out there, particularly when you look at CNBC, and there's a lot of people who uh, invest in a different way, right? There's day traders, there's like the Wall Street bets that crowd. There's a lot of people, and I don't mean to denigrate them at all. Everyone has their own way, but it's a different game than I'm playing, and so you kind of have to be very careful with curating. And I'm very careful with the people that I follow on Twitter, making sure that their investing style is in line with my own. And I'd say that's probably the most powerful resource I found in terms of discovery of stocks and bouncing ideas off people and reading up on some smart bear arguments and bull arguments. One of the most valuable things to me on Twitter is when smart people will present an argument against one of my top holdings. I love reading that because either they'll point out something that I missed and makes me reconsider and maybe saves me from a mistake, or I find my conviction strengthened in that company. And so even when it pulls back 30, 40, 50%, which a lot of these great long-term investments almost always do, you see these massive drops all the time. It helps me to hold on to them and maybe even add to them if I have free capital available.
Yeah, that makes a lot of sense. It's a difficult emotional game, as we always talk about it, because if you're investing in innovation, the path to innovation is not this linear nice path. It's this like jaded ups and downs that are very deep and very sharp and deep and sharp and deep and sharp. So take us through one example that when you hear a good stock that you did not know about, or maybe you've been thinking about it on Twitter since you talked about it, how do you go from seeing that ticker or getting to know that company all the way to forming an opinion whether you would want to buy or sell, or like let it go, basically? What is that secret sauce, if you could share with the stock guardians, of hearing from a company all the way to forming a decision?
Sure. So let's take maybe C Limited, ticker symbol SE. That was one that I heard of. Gosh, time flows weird during a pandemic. I don't know if it's a year ago, a year and a half ago, maybe even 2 years ago. And it's something that I heard on Twitter. And at first, it was presented as a gaming company because that's what it was originally. It was Garena was primarily a gaming company, and that I thought it was kind of interesting, but I didn't really dig into it much. And later, as time went on, I just started to hear about how they're moving into e-commerce and digital payments and all sorts of other things, which piqued my interest considerably because Mercado Libre is one of my largest winners, and it seemed like they were following maybe a similar path, right? A up and coming area of the world outside of the United States, one for Latin America, one Southeast Asia, and serving a growing middle class that's becoming wealthier, and dealing with a lot of people who maybe don't have the same attachments to a lot of the same traditional banking services and retail stores that we do in the United States. So I started looking into it a little bit more. I would say that one connection, humans, we look for connections all over the place, and that was one of them to me. Like it's a lazy way to say it, that C is like the Mercado Libre of Southeast Asia, but it helps get you into that mindset of okay, maybe this is something worth looking into. And so I pretty much I started reading up on articles on Seeking Alpha and on Motley Fool. Started doing searches on Twitter to see what other people thought of C in terms of reading up on their founder. I like it when a company is founder led, and the founder has a lot of skin in the game. And I became really impressed by Forrest Lee and his story. Started doing some research into the economies of those areas, right? Like Latin America, there's a lot of things to like about that area. There's also a lot of things not to like in terms of there's been a lot of issues with mismanaged economies, corruption in government, and currency fluctuations, and all sorts of things. And so I wanted to see like, well, what countries are they in? What's the situation of these countries? Are they stable? Looking into the financials of the company, and just kind of getting a sense of uh, not necessarily where they are now, but where they could be 5, 10 years in the future. And do they have the management who's willing to take those chances and will and it has done all these different things in terms of optionality, right? I was the impressive thing is they had the successful gaming business, and they decided to not disrupt themselves, but they voluntarily decided to start growing into all these different areas, which is something I love to see when you have a founder-led company who is willing to take all these risks and grow into areas. That's usually the secret sauce to a really good long-term winner.
Right. And how long was this process, if you remember, from the moment that you heard or heard about it or read about it all the way to you forming a conviction? What does that timeline look like for you?
It can vary a ton. I would say oftentimes it's 6 plus months. In general, it depends a lot, right? Like if it's an IPO, I generally do not like to buy very soon after an IPO. I like to see how a company performs for at least 3, 6, multiple quarters before I buy in. That doesn't mean I never do. Sometimes I do, but I like to wait a while. There have been companies where it's kind of taken me years of just kind of watching them and seeing and sitting on the sidelines before I'm finally like, I should have gotten in a long time ago. It's time. And on the flip side, I want to say I think Livongo, which is another company that I invested in over the past 18 months or so. That one, from the time I heard about it to when I started investing in it, was probably under a month. I loved so many of the metrics that I was seeing in the company, so much of what I was hearing from other people, and so it could vary, but I'd say the average is probably 3 to 6 months.
Wow, that's good. That speaks to your patience as an investor that you're willing to wait because most people want to kind of hear about a stock and then by like in 30 minutes they make a decision and are like, oh, I'm gonna go in. But there's a downside to it. If people do very fast decision making, the conviction that you have about buying a stock doesn't get formed enough. So when the stock goes down, it's difficult to add because you haven't yet done the research to form that strong conviction that if it goes down. So what happens in your mind when, let's say, most of the companies you mentioned, or three, like Mercado, C Limited, and Livongo. Well, Livongo got acquired, but before it got acquired, what goes through your mind when these stocks have one of those days that cry? It's not very uncommon that they go down 20%, 30%. What is that emotional cycle and what is that logical cycle that you go through before pulling the plug of like, okay, I want to add more to the same position?
Sure. Yeah, and this is an area where I think my like the the close to 20 years that I've been investing really plays into my favor because I was investing during the Great Recession, right? I was watching as every day stocks were going down like 1, 2, 3% for like months and months and months, and so I'm kind of in some ways I I felt those emotional lows, and I know like okay, there's it's not the end of the world, right? And to me, the key from an emotional standpoint is to just keep telling yourself the stock price, especially over the short term, is not the business. They are two completely separate things. And the, is what's the Warren Buffett saying? Over the short term, it's I'm not gonna go with a quote because I'm gonna screw it up. But over the long term, it's a value. You're valuing the company, and over the short term, it's just kind of a popularity contest. Is kind of the idea of it. And so, if I see some company has gone down 10, 20, 30% over the course of a month or 2 months. So first of all, that's happened a lot with most of my holdings. So it's not at all an uncommon feeling. But secondly, I just go look at the company and how it's performing. And if the company is not performing any worse than it was before, then to me, I see it as a sale, right? Like it's a 30% off sale. You go to the store, human beings are kind of weird when it comes to investing. We don't we shouldn't be buying uh, investing just for today or for tomorrow. We're investing for the far future, for 10, 20 years in the future. And so unless you're planning on selling those shares in the next couple of days, if it's going down right now, great. It's a company you like, you're getting a discount. And so that's the way I try and look at it in terms of an emotional perspective. From a logical perspective, honestly, I stay fully invested the entire time. I don't keep dry powder around because to me, keeping any capital on the sidelines feels like it's an attempt to try and time the market. You're trying to think that, oh, I think there's going to be a pullback soon, so I'm going to keep some money on the sidelines. And so that's just not my style. The market has gone up far longer than I thought that it should, and thought that a pullback was due. And so I don't keep cash around. And so to me, if I want to buy on any kind of dip, I need to find something that I want to sell in order to free up capital. And so it's a constant comparison of different positions in my portfolio. If I want to add some to Mercado Libre that's down over the past couple of months, I have to find something that I have less conviction in that I can sell in order to add to it. And so for me, it's always kind of a comparison of ranking my different positions in terms of conviction. What have I lost some conviction? And if so, if I've lost enough conviction, then do I sell it to add to something else?
Mm. Okay, that makes a lot of sense. Well, and I love it that when you say I don't keep cash aside, because that's a very unpopular, strategy. Or a lot of
Yeah.
people say, take your. A lot of investors I know use like a stop loss because they don't want to get those like crazy crashes, and they believe they can protect the downside and try to move forward. Although I don't really buy into that strategy unless it's very short term, to your point. If it's like your time horizon is 6 months, you would probably want to control your downside because you may not be able to recover a 30% crash in the matter of 6 months. But if you're looking at it long term, this thing, you should not even really worry about it. The next question is, what is your strategy, or how are you going to use your stock cards portfolio? So what you have on a stock card, is that all of your decision, some of your decision, what is it, and how do you plan to keep it updated?
Yeah. So as we mentioned before, the Freedom Portfolio is kind of what I've been tracking on my website at Paul Versta Market. It represents the portion of my retirement funds that I am directing myself, basically, in terms of buying and selling individual stocks. I have other retirement funds that are in index funds because as much as I do, uh, I I am comfortable taking on a great deal of risk in terms of my individual stock portfolio. I am largely fairly conservative when it comes to money in general. And so I still, in the back of my mind, think, I could just blow this all up. So let's keep a little bit in some passive index funds just in case. So I do have other retirement funds, but for the most part, anything that I am buying and selling um, uh, individually and my portfolio I'm managing is all in that Freedom Portfolio. And to me, it represents the reason it's called the Freedom Portfolio. People probably wondering why is it called that. I needed that because it represents financial freedom to me, right? The whole reason that I invest ultimately is because I want to have the freedom to have ultimate control over my time, to decide if I decide one day, I don't want to go into work and I just want to take my kids to a baseball game, or we just want to pick up and go on a cross country trip or something like that. I want to get to the point where I can just do whatever I want to do if I decide to do any of those things, and that's why it's called the Freedom Portfolio. And it's my way of trying to bring that day closer and closer as I try and beat the market.
I love that. That's a good vision or aspiration to have to move forward. And it's, yeah, beauty of having the freedom of time. Maybe it's more than having tons of money. It's much more better than having millions and millions of dollars. But if you're always busy to not use it, what's the point in there? And investing is one of the best ways actually to get there, because you could create this evergreen source of wealth that is keep growing, so you don't need to worry about it once you set the foundation right. I love it. So let's get a little bit, let's give the stock guardians a little bit of a sort of like gift. We always do this during these introductions. You've already gave us three good tickers: C Limited, SC, Mercado Libre, MELI, and ELI. And oh, Livongo, we can't buy it anymore. Livongo got acquired by Teladoc.
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 Hmm.
So TDOC, TDOC. Those are three tickers. I would assume you still love them as you did before, since that's your strategy. But just to make this episode very special, what is one more ticker that you would be feeling to buy right now, and why?
Yeah, so I mean, I really like Redfin, and maybe it's a little bit of it could be a little bit nostalgic because it was one of the first companies that I really kind of dug in myself and did a lot of work on my own to try and understand the business. It's actually not founder led. Glenn Kelman is not the founder, but he's been with the company for all but like 1 or 2 years of its existence. Um, and he's a really great interview. If I encourage anybody who's at all interested to look at any of his interviews in terms of on CNBC or listening to any of the earnings calls. He seems like a really genuine, fun guy who's passionate about disrupting the real estate market. I guess I should probably explain what Redfin does. Actually, Redfin is a way of playing the disruption of the real estate market. They have their website redfin.com. They also are an online brokerage, and they're most people might think of them as a discount brokerage. They offer lower commissions, but I think they're a lot more than that. They offer iBuying services, so they will offer to buy your house from you, similar to an open door. But they also have some interesting other business lines. They have Redfin Mortgage, Redfin Title, a concierge service where basically they'll take care of kind of fixing up anything that's wrong with the house and staging it and everything for a higher fee. And then they have Redfin Direct, where you can actually make an offer on a house directly without an agent. So I think the best way of describing Redfin is that they're trying to create their mission statement is to redefine, I think, real estate in the consumer's favor. And the thing that I like about them over a company like Zillow or Opendoor, because that's often what gets brought up, like why Redfin over these other companies, is because I think they're doing a great job of meeting the customer wherever they are, right? It's not just a play on iBuying. It's not just a play on making an offer without an agent. Basically, any way that you want to buy or sell a home, Redfin wants to be there to help you with it. They currently have just about like 1% of the real estate market. Real estate is an incredibly fragmented market. And I think anybody who's bought or sold a home probably realizes just how desperately it needs disruption right now. And I think that Redfin is a great play on that, and it should be. It probably won't be. It's had a big run up over the past year, but I think it has a long way to go still because buying and selling a home it's not something that people just do on a whim, right? This is something that you don't buy and sell a home every day. It's every 5, 10, 15 years or something like that. And so to disrupt real estate will take a considerable amount of time. And I think they're making a lot of good inroads and they have a long runway, but it will be maybe a little bit slow going, but I'm really excited to hold on to this one for the next 10 plus years.
Yeah, I love it. Interesting. My husband and I just sold our house and bought a new house, and we sold our house through Redfin and did a lot of research through Redfin to find our new house. And I'm with you in terms of the value they create in the selling process. We use Redfin concierge service. And it was fantastic. We basically just moved out of the house, gave the keys to our sort of concierge, I guess, associate or concierge project manager, if you want to call it. And she was fantastic. So she and the customer, the agent who was selling our house, worked together. We were doing our day work, and we were moved out of the house, and they just, after like in 2 weeks, the house was renovated, painted, prepared, staged, pictured, everything. And like we sold our house in 3 days. Like on the third day, we got an offer that we accepted. So it's just that process of not worrying about anything. And the beauty of it wasn't even expensive, right? It was not like, at the end, we ended up paying the same amount of commission that we would have paid another agent who come in, and we would have done all that kind of project work ourselves potentially. So it's so beautiful model. It's so customer focused. Like, if it's myopically focused on the customer, that those kind of businesses, sort of, it's the kind of businesses you would want to be part of. I love that. And to your point, like, I mean, it went up to 100 and something. Now I was just checking at it as you were speaking, checking at Redfin's stock card. It's about $61. It's still expensive with traditional metrics, but it's way down of its all-time high, which it was sometime last week. So that's pretty last year. That's pretty cool. So I'm gonna tag along that question, but like turn the coin to the sort of like a negative side. And what is one stock, or perhaps one sector, or one theme of stocks that you would want to stay away from, and why?
Yeah, I mean, maybe this probably isn't going to be the most exciting thing, but I'd say the meme stocks, AMC, GameStop, stuff like that. So I realize lots of people have lots of different ways of investing or trading or whatever, and I don't. There's too much negativity out there. I don't want to say that anyone's doing it wrong, but I worry that there's a lot of people who don't know what they're doing, who are playing around with buying and selling these stocks, and more dangerously playing around with options involving these stocks. And I I basically don't use options at all. I find them to be a little it's already hard enough to find like the good high quality companies, and using options and trying to figure out like the timing along with the high quality companies is just a step too far. But it seems like a lot of people are using options in a really risky way with a lot of these stocks, and most of these stocks, I know I said, these companies buying overvalued companies that look overvalued now is a great thing to do. These are really detached from reality by a lot of valuation metrics. And I've talked to some friends who have never shown an interest in investing before, and they come up to me and be like, "Hey, how about that GameStop? How about the AMC?" People, and that to me is always a big warning sign about a bubble, or about some sort of impending badness on the horizon, right? Like right before the real estate bubble burst, a lot of people were talking about investing in real estate, and so I worry that there will be a time when a lot of people will get burned in these companies, and so I won't say that they're going to go down today, tomorrow, or anytime in the next year, even. But just be very careful, because there's a lot of people playing a lot of dangerous games with these stocks, as we saw with GameStop, and a lot of the short squeezes and everything else. And it's not something I want to get within 1,000 miles of.
Yeah, that makes a lot of sense. You are, I think, the second content creator or portfolio publisher that we spoke with in the last week, actually, and they brought meme stocks as danger to stay away. It's just so emotionally appealing to a lot of investors. Just, it's so beautiful. Like, you buy something, you don't even have you spend 15 minutes researching, and that's not painful. Maybe you're sitting in front of TV and that's your research, and then you buy in, and then somehow something happens, and then tomorrow your money is 3 times bigger, and then everybody's like, oh my god, this is just such a good free money. Why don't I do more of that? And then that's the danger, right? That's the problem with sort of this kind of investing, because the same way you could see another 30%, 60%, 100% crash, and then you can do anything about it because you don't even have any research it. So that's a really, really good point. All right, so we have a few more minutes, 4 minutes, I guess 5 minutes in this conversation. Tell us about, where can people find you if they want to learn about you. Obviously, we have your Freedom Portfolio and a stock card that people can follow, and we encourage everybody to go follow because they can get notified when you add or sell some of your holdings, which I believe there will be more buying rather than selling, but we give you send notifications to all of that. But beyond that, where else people can find you, and if you have any last sort of like wisdom you want to share with your followers within the stock market community.
Sure. Yeah. I mean, I'd say that there's the two main places to find me is at the website that I've mentioned a couple of times. It's paulvsthemarket.com. I write up things not as often as I'd like, but every quarter I do a quarterly recap about the Freedom Portfolio, how things have performed, any changes to the portfolio. I write up my thoughts on companies, and whenever I make any kind of buys or sells. I'm also somewhat active on Twitter at Paul_Essen, ESSEN. Again, it's a little inconsistent. Sometimes I'll go dark for a little bit of time, but I definitely I try and make an effort there. And I guess the last thing I'd say is, and I touched on this before, but one thing when I worked at the Motley Fool is I got very passionate about financial literacy, and I do think that a lot of the I don't want to say a lot of the problems. There are a lot of problems in our society that I think can be solved by an increase in financial literacy. I think, I want to say it's Anna Maria Lusardi has these three, the world's smallest like financial literacy quiz with three questions that seem, three or four questions. They're really basic questions that seem relatively straightforward and simple, and a lot of people get those wrong. And considering that compound interest is the eighth wonder of the world, and the how wealth building is investing is such a key part of wealth building, and and how getting into credit card debt and everything can just and not having an emergency fund and can just absolutely destroy your financial situation. I think it's so important that people get a higher degree of financial literacy, and I wish our schools would teach that more. And to do my own very tiny little part of that, I did write a children's book called Penny Invests, and part of it was just selfish. I wanted to try and come up with something to kind of teach my own kids about investing, and they were kind of my guinea pigs. I tested out a story, and we went back and forth. And it's available on Amazon. You can check it out. I would love it if you have kids and you haven't talked to them about investing, maybe give it a try and see if they're interested. But even if not, then just have the conversation, right? Like, don't make money a taboo topic. Talk to your kids about debt and about investing and about saving, and and all the different things, and hopefully we'll all be in a better place if we all get a little bit more financial literacy.
Yes, that's I'm into that. I like that. And on your Freedom Portfolio and stock card, we allow we ask our content creators or portfolio publishers to share their favorite brokerage. For you, you chose to provide a link to your book, which I think is a lot more valuable than just sharing the brokerage. So people can find obviously your book through your portfolio, but just on Amazon, I believe if they search for Penny Invest, it would shows up as well. And we'll make sure it's in the show notes here so that people can follow and find your books. Paul, with that, thank you so much. This was great. I look forward to collaborating with you. I am one of your early followers on a stock card. I'm sure I am. And we're hoping that the other stock cardians to also join and follow you and get to know you better. We're super excited to have you on a stock card. Thanks for publishing your portfolio here.
Thank you so much for having me. It was a lot of fun.